This is Swarfcast. I'm Noah Graff. I am very honored to be with Rich Gaffney, Vice President of Commercial Operations at Century Equipment in Oconomowoc, Wisconsin. Welcome to the show, Rich.
Thank you, Noah. Glad to be here.
Awesome. I am very excited about this episode because we're talking about a cool topic, ESOPs, something that a lot of people have maybe heard of, but it's kind of mysterious. Even the people who know what they are. Before go any further, though, just tell me what your company does really quick. Century, what do you guys make?
Sure. So we're Century Equipment is a global equipment manufacturer. Our primary products are sample conditioning products, as well as sample capturing products for a variety of industries, virtually every industry. And then we also have a service organization that works on clarifier drives and wastewater treatment processes, as well as maintenance and upkeep of sample conditioning systems in power plants and chemical plants around the world.
And you're making a lot of stuff in-house?
Yes. Yep. So we have a very robust supply chain, but everything that we can do in-house, we continue to invest in our automation and our manufacturing operations. We do sheet metal bending, we do full machine. Welding is really our forte. We are an ASME Section 8 facility, so we have really top-notch welding capabilities here, of course, and then along with that comes testing and a final assembly. So yeah, we do everything as much as we can in-house, and we have 3 facilities. I'm coming from our Wisconsin facility. We have a facility in Houston, Texas, as well as one in Salt Lake City, Utah.
Okay, but you're at the mothership.
I am, yes. Yep, at the global headquarters, yeah.
Okay. I want to know a little bit about you now.
Sure, fair enough. So by trade, I am a mechanical engineer. I graduated a number of years ago with a mechanical engineering degree. Obviously, machine design is my background. That was my even specialty in mechanical engineering. I worked for a large agricultural chemical company. I did field service engineering work as well as R&D design, and actually transitioned my way into sales quite some time ago. So early 2000s, I transitioned into a sales role. Through that company divesting in some of the products, I took another sales position with a technology company. And then in 2005 was recruited by Century as they were looking to diversify their product portfolio and was looking to grow. And so I've been with Century at this point, coming up on 19 years next week. And I've always been a customer-facing person in the company. So that's regional sales, and then it was national and global. And then now my current role is VP of Commercial Operations. And in the operations, commercial operations in the company really encompass anybody that's customer-facing. So that's marketing, it's sales, it's application engineering, project management, field service. All of those entities and all of those discrete, really business units culminate in the commercial operations, and we tell the entire story of a project, from prospect or lead all the way through out the door, and then final servicing after the fact. And so that's what I've really tried to bring to the commercial organization, is that full customer experience and that 360 view and the 360 relationship with our customers. So it's not just for us about producing the equipment and then having it sit in the field and be used. We also do the ongoing maintenance and repair or retrofitting. If something was to fail, we can come out and retrofit as well.
So you are basically in charge of keeping the relationships healthy.
Yes, that's exactly right. Yep.
And by keeping the relationships healthy causes growth and people to hopefully not leave.
That's right. Exactly. Yep. Both customers and employees, right? Retention all the way around. Yes.
Got you. And you do podcasts? Have you done any others besides this?
I've done one other. podcast a while ago. It's called Over the Pint, and yeah, that was a good time as well.
There's a lot we can talk about with your company. It's a really interesting company. It's how old is it? 100 years old?
So we're 100 years old. Yeah, we're getting ready to celebrate our 100th year, and so the October 2024 essentially through October 2025 is our celebration. Yeah, so it's
Wow.
really great because not many manufacturers make it to 100 years old, and not many of them are mature ESOPs like us either.
Yeah, not many companies go 100 years either, for
Mm,
that matter.
yep, yep.
Now, one of the most interesting things about your company is the fact that it is an ESOP. Explain what an ESOP is. Give us the 5-year-old definition, and then we'll dig deeper.
Sure, yeah. So ESOP really it simply stands for Employee Stock Ownership Plan, and really what that is, it's a function of each employee owner having, or each employee having ownership stake in the company, and so really what that does is it creates this financial vehicle, really a midterm or long-term financial vehicle for its employees, um, as a potential retirement entity, or if nothing else, just real equity and ownership over the outcome and successes of the company and being able to share in those rewards that come along the way. That's really at the base definition. That's what an ESOP is.
But ESOPs do come in different shapes and sizes. Um, how long have you guys been an ESOP?
So we've been in ESOP since 1986, and that's a good point that you bring up, Noah, that they do come in different shapes and sizes. I mean, there's around 6,300 ESOPs in the U.S., about 14.5 million participants or employee owners. Now, there are other variations of that program that would make that company count come up or the participants come up, but that's absolutely right. Every ESOP there are boundaries and legal guidelines to establish an ESOP, but companies have some latitude over how they give ownership stake and what that looks like and percentages and things. And so each one is unique in its respect, but every ESOP goes through a maturing process, just like you would any other ownership process. So yeah, we've been in ESOP for quite some time, and we've lived a few cycles of major retirements, through the business. Being around as an ESOP for a while, we've seen cycles of people retire and had to plan ahead and plan accordingly for those activities.
I've interviewed a few ESOPs before, um, but it seems like your company is the most quote unquote mature. Give me the process. Back in 1986, what happened? It was privately owned?
Yep. Yeah. So the original owners of Century Equipment had decided they wanted to retire, and they didn't have any children that wanted to take over the business or had any interest. And looking at the employee base, there was an incredible amount of craftsmanship in the company, as well as a long tenure. And so, really, for the function of the previous owners, it became a function of legacy for them. So the Henseys wanted to leave Century Equipment and leave this legacy to the employees. So what they did is they went through the process of establishing an ESOP, and rather selling the company to another corporate entity, sold the company essentially back to its employees. And then over time, that's how the ESOP matured. But most folks that do or decide to go the route of an ESOP through a transition of corporate ownership usually are about leaving the legacy behind, more so than just the financial transaction of selling the business.
Like your owners. Yeah.
Exactly. Yep. Yeah, they were well established in the community in Wisconsin and wanted to make sure that that stamp was left, and they wanted to show their gratitude for years of hard work and labor from the employee base.
Do you think they might have been able to get more money in their pocket had they just sold out to an owner operator or a private equity firm?
It's very possible. I mean, the financial part of the transaction and the business value. I mean, ESOPs are still privately held companies. We're not public, but we have So the valuation process and everything like that, the company's still valued. So yeah, they could have maybe got a
But they
premium
got a
or
nice, eventually they got a nice payday for their company.
absolutely. So they got a fair price for their company,
Oh, I
no
hate the
doubt.
word fair. But anyways, I just wrote a blog this week about how I hate the word fair. Um, I mean, what is fair, right?
Yeah, it's really up for interpretation,
It's
but
very up for interpretation. I feel
yeah,
like I know we're going on a tangent, but I think unfair is is often easy to define, and fair is something, unfortunately, that you run into when you're talking about buying and selling companies because you need somewhere to start.
yep.
Um,
There's market value and market range, and in any ESOP transaction, somebody turning their company over to their employees, certainly they're going to get a market price or market range. Sometimes you fetch a premium depending on who some potential private equity could be or other corporate ownership could be, right? And there could, so you might be giving that up, but truly what it is about is leaving that legacy behind, and you're still going to be in and what market range would be considered.
how is the bank involved with an ESOP? So you basically have to sell it to the bank, and then there's debt to the bank, and slowly the company pays off the debt, something like that.
Sure. Yeah. So essentially, you take a loan out, no different than you would finance any other type of transaction. There's a loan taken out, and then that loan is the original loan is paid off over time, and that's the leverage of the business, right? And so that can be itself structured many different ways as well, because sometimes you run into seller type financing and things like that. But the bank gets involved primarily as the financing vehicle, as it would in any other transaction.
And that's the way you can value it because you go, well, how much would a bank loan you?
Yeah, so it's typical in an ESOP organization, or obviously in any business. If you're going to sell, you have a market study done. You value your assets, and you do all of those financial. You do all the financial due diligence. No difference. Really, what it comes down to is just the function of the company changes because the ESOP and ownership and mechanics behind it are really the nuance.
One question I forgot to ask: do you guys have a lot of tax advantages?
We do. So that's mechanically, that's the real nice part here is we don't pay a federal tax, right? Because everything, the concept of our ESOP. So you mentioned a second ago quasi ESOP, right? So there are other plans out there that are not. So when I gave you the number of 6,300, that's true operating ESOPs. There's ESOP-esque type of companies, and and there's probably 10 or 11,000 of those or something like that. But true ESOPs, we turn everything profit wise back to the business. It's spent. It's either put in employee retirement, aka ESOP. It's capital expenditure on making our processes more efficient or whatever, buildings, people, whatever it is, right? And honestly, Noah, the mechanics behind and the banking and all of the things behind an ESOP are great, and primarily it's a financial vehicle. We have found, and I've personally found, more leverage in the ESOP as it comes to employee engagement and like productivity and quality. And
I want to dive into that. I just want to know, one day it's private and then the next day it's employee owned. How long did it take for you guys to go from privately owned by a family to entirely owned by the employees?
I'm a little embarrassed, but I don't know that answer off the top
Okay,
of
that's
my head.
fine.
But is what you do is once the note is the obligation of the financing is done, then the ownership transitions. Now there's ownership transition in any deal,
Sure.
obviously. So there was time where the previous ownership was cycling out and a new president was being brought in, and things along those lines. But yeah.
All right. So the employees now own the company, but do the executives own a lot more than other employees? How is it? How is the pie divided? And I'm guessing this could be different from one company to another.
Yeah, in Century's case, the pie is divided equally across the board. So executives executives have same access that anybody else does. Now, other ESOPs, that may not be the case. And in Century's case, our ESOP is willed as well, which means there's no out-of-pocket expense to any employee to become part of our program. Again, that's a potential differentiation, but in our case, it's all even across the board and everything is willed, and that's what we believe is the true spirit of the ESOP.
Okay, so it takes just as long for a CEO to become vested as a machinist.
That's correct. Yep.
Okay, very interesting. So how long does this process take? So you come in, and the first, rather than it being put into like a 401k, or maybe there is a 401k, but in addition, a certain amount of somebody's paycheck goes into a piece of the company?
It's really not a paycheck. So the investment period for us is 6 years. And what's happening is every year a certain percentage of your income is willed to you in the form of stock. Now, in Century's case, we pride ourselves on having top-notch benefits. So we do offer 401k, and we have all of the other typical benefits package any other company would have. So this is truly an above and beyond in our case, where we have a percentage willed every year, and then over time that accumulates. That wealth accumulates, and as stock price goes up, and we're doing a good job as a company, that stock price rises, and that wealth just accumulates even more at that rate, right? And then at the 6-year mark, you would be considered fully vested, or what would be considered a certified employee owner in our world. And so we celebrate.
So every year, like what, a percentage of your salary is being put in, or?
Yeah, it's a percentage of your total compensation is being put in, and that's what's willed back.
Okay.
As your
So
ownership
a CEO
stake.
would be getting ownership shares faster, or be getting more because a higher percentage of their salary would be put in.
So the same percentage of salary would be put in regardless of employee. So it's a set standard in our case, where
Right,
it's
but if you're
a certain
making
percentage.
50,000 and
Correct.
you're making $500,000, you're going to have more shares quickly if you're
Correct.
higher on the
Yes.
totem pole.
Yep. But there isn't a differentiation of number of shares. It's just a function of the value. Yep. Correct. Yep. What I mean by that is a CEO or doesn't get 10 or 2 times what somebody else would get put in. It's still the same. It's all based on percentage, true, but it's not that they're getting a disproportionate amount. They're getting the same amount percentage as everybody else, but that would accelerate based on total comp. Correct.
So in the end, the company, say you cashed out when you retired, somebody who was an executive would get the same amount as somebody working in the shop had they been there the same amount of time?
It would be based, so the ESOP value would have grown, meaning year over year growth of the stock, that would have come through, but it would be based on their percentage over time, right? So the dollars wouldn't be the same, right? Because a percentage of $100 is different than a percentage of $10, right? So there, it wouldn't be the same dollar figure, no, but the percentage that's given is the same regardless of if it's $10 or $100.
Let's dive into how this affects the culture and the success of a company. I've researched this a bit, and I have to say it's really interesting just how ESOPs just excel, or they can, because of this new setup. Can you tell me anything about the company, like pre-ESOP and post-ESOP, or you really don't want to opine on that?
So I don't have much knowledge of pre-ESOP versus
Okay.
post-ESOP, but I think the fact that the previous ownership, that the Henze family felt passionate enough to sell the company back, showed that culturally they already had the base cultural alignment of what an ESOP would embody, or at least they believed that, right?
Okay.
And so I think, it's safe to say in Century's case, we had, a tight knit group of folks that were really aligned with the mission, vision, and values of the corporation as it stood. And we just carried that into the future by turning that into an ESOP. And I'm going to be honest with you, I mean, it's fun to talk about some of the mechanical goods of an ESOP and the financial part of it. And I
No,
know,
but
and
I
I know
want
we
to
got,
get this part. I'm just trying to understand it because it's a little over my head. But I want to know. I want to know what's the feel of Century, and how do you think the ESOP influences that? What do you see as you've been at other companies, so you have a base of comparison. And what do you see as far as employee engagement, people's purpose? Give me a little insight on that.
yeah. So, and this is really the part that excites me because ever since I've become part of Century and been part of the ESOP, I've been told about, the vehicle in which it is, but I've thought it was intriguing. And I think the power really of an ESOP is unleashed when you get the culture aligned with the mission of the company. And so I look at it where the culture is really playing the role of the ESOP and the financial rewards follow, period. And I think that can be transferred from company to company, but in an ESOP, because there's that connection and there's the transparency of what's happening inside of the company, it really brings that culture forward and it creates and promotes this continual improvement style of engagement. And I'll leave an analogy. Our president does a nice job of this. He likens it to, you go out to eat. Would you rather be served by a waiter or the owner of the restaurant? And 9 times out of 10, you'd say the owner of the restaurant, because I have an invested stake in the success of that restaurant, where the waiter may or may not have that same stake. Well, in our case, everybody essentially has some stake in ownership and the success. And so plugging into the culture and really focusing on the culture aspect of the ESOP pulls the engagement forward, pulls that productivity and quality, it brings ideas forward, and it brings people together around a common goal, a common good. And I think what happens now is we see the business from different perspectives. I said earlier, welding was a cornerstone of what we do here from a manufacturing standpoint. We get continual improvement ideas from our welding department. And some of them may be small, some of them may be bigger, but through their lens, they really feel empowered to speak up and say, hey, I think this might help. And they're doing it from a frame of reference because they know that either upstream of them or downstream of them, that's a transaction taking place. And if it goes smoother and we become better as a company and we serve our customer better, they're going to have a reward in that as well.
I've talked to several people on this show they're all about lean manufacturing and lean culture, which is a lot about employee engagement. It seems like maybe this almost organically brings out the engagement from the employees. Would you say that's true, or is it pretty much like these practices have been established regardless of, the ESOP?
I think it organically comes out. I think people come to the table wanting to take the pieces of lean or pieces of QRM or whatever methodology you have in manufacturing or even just in business in general, and they bring the pieces to the table that they think would best represent or best suit improvement in our environment. So I think there is an organic pull on that. And that gets back to sharing in that midterm, long-term success of the company, right? And so I think it does organically pull through. So when companies go through a transition to lean and things like that, a lot of times that's the executive team pushing that down through the organization and saying, this is our methodology in our environment, and focusing on the culture and leading with the ESOP, we're getting some push up to the executive team saying, have you thought about this? Have you considered? Should we try something? And so we find ourselves, getting organic ideas from all or more aspects of the business than you would, I think, normally.
Is it strange for people when they come into the company from other places, and you can talk about your own experience? Like, is it almost culture shock?
I think so. Yeah. I mean, even from my own experience, you're told, oh, an ESOP and this is our culture and this is what we do. And you're like, you're a new employee. So you're like, sure, at some point, the, the, the honeymoon's going to end, right? But the reality is, I mean, we're not a business without fault, right? But the reality is the honeymoon doesn't end because we truly try to deliver on that message that we preach. We want that engagement from our employees. We do pulse surveying. We have engagement, at all levels of executive management. So we really want that feedback. The weird part, I think, for folks is how many organizations would a second shift assembler approach the president about an improvement idea and actually get an ear to listen and a venue to talk. And
That's incredible.
yeah, it doesn't happen. But, we have quarterly meetings and I'm one of the folks that stands up and speaks, and I'm open to all questions, and I truly welcome questions from the employee base. Sometimes it's not in an open forum, sometimes it's after they want to just come to my office and ask me a question, or bring me out to the shop floor and ask me a question, right? Which is fine by me. I welcome that. I believe personally and culturally, we believe that's how we'll improve.
Do you have open book accounting?
We do. I mean, so we run our business, our CFO runs our business as close to a publicly traded company as possible. So we have pretty much open book. And what that means is that, quarterly, our employee base gets to see pretty much the full financial picture, where we did good, where we didn't do as well, and why we didn't, maybe why we didn't think we did as well, or what corrective actions we had to take. So we
How
have
often,
everything.
how many people get into paying attention to that?
A lot of people. Actually, we get some relatively good engagement in our quarterly meetings. I mean, I think for the most part, they
So
are looked
what
at as,
percentage are you talking? Like 50% of the company, or?
oh no, attending the meeting, and I'm assuming we're probably closer to 90, probably 85 to 90%. Yeah,
Wow.
and we record those because we have a contingent that's, field service and field sales. So if they weren't able to log in, they're able to watch the recording. And so yeah, I think we have really great engagement, and we're trying to, we have something called a balanced scorecard process. So every year we have a number of projects that we look at corporate wide. Every quarter we even talk about where we're at with those. We give highlights of where we're at in the process of those, because those are all invested resources. It's either time, treasure, or talent, right? And so those are all invested resources. So how are we tracking? Are we tracking with or not with the progress we wanted? Or are we getting impact that we thought we would get? And so we have that open dialogue at that level. So it's not even just a financial meeting as much as it is a news and announcements. Where are we at on key initiatives? Where do we think we're going to be for the next quarter? And we do some employee spotlights. We use that venue to do an employee spotlight. So we really try to make it almost town hall-esque, right? Like it's really an open forum, and we get good
And
participation.
they vote on things, and
No, there isn't any voting during those meetings. We don't have open voting sessions or anything like that. This is a more for information and a Q&A
but I
than
mean,
anything else.
okay, so a lot of the employees, they can't actually make the decisions, but they have a voice.
Correct. So our kind of our motto is, everybody has a voice. Not everybody has a vote, but everybody has a voice. And our commitment as an executive team is really to listen and to hear those voices. And we owe that to our employee owners, to hear them out. And that's where some of our best ideas come from. So it's never closed, but yeah, there isn't an open voting or anything like that, but there is several venues for their voices to be heard and their ideas to be submitted.
Can you give an example of something where just somebody in another department had an idea that was used by management that they wouldn't have come up with otherwise had they not had that resource?
Sure. So we have what we call the Ownership Impact Collective. So it's our social committee for all intents and purposes. And they wanted to start doing pop-up events, an event we call OJ with owners. And so what they wanted to do is get as many people to sign up as possible and give it a 15-minute, 30-minute mixer, basically. And they intentfully try to put people in departments that they don't report into. So this was an idea. The whole Ownership Impact Collective was an idea. And we heard it out and said, this could really help us connect. But how do we even get the remote folks to connect in, right? And so we troubleshot that and said, okay, well, somebody's going to be designated to bring a laptop, or we'll have these sessions in rooms that are media driven, right? So we can have even remote folks or folks from our other facilities involved in the conversation. So, once a quarter or thereabouts, we started this process. Now, that was a soft, that was an example of a soft idea, right? More employee engagement. But I think that was pretty impactful across the board because that started to open the dialogue up horizontally between the company. It's so easy to become siloed in your manufacturing, right? Engineering, sales, manufacturing, and each of them have their subgroups too that are probably siloed. So to really break down those walls horizontally and get employee owners talking with employee owners, I thought was a pretty good idea, and it's of no substantial cost to the company. But that was an idea brought forward, and we said, let's try it, and we've had really good success with it. And now
what can you name a few of the ideas that have come from it?
Sure. Well, so that's more mixers, right, than anything. I think the success we've had from it, Noah, is that we're creating connections. One of the ideas that we had is a century garden. Like everybody's like, hey, we'd be fun to do like a community garden alongside of our facility. So we did that, But the point that I'm trying to get across is the conversations happening horizontally through the company make us more efficient, build more empathy. So as we're handing our work off through the process, I'm not just handing off work to Noah or to a welder, I'm handing work off to Noah, right?
Yes.
And I know Noah because we've had some time to interact and get to know each other a little bit, right? And so there's a little bit different empathy there. And then those and ideas. So we've had, several, manufacturing ideas. We have one of our manufacturing engineers. It's kind of like a hobbyist with 3D printing. And so he's really kind of taken over and said, hey, if we purchased this 3D printer, we could do some of our componentry here. And this is going to be a significant cost savings, not only on a per part price, but even the way that we have to stock. Today we have to buy quantity, or we have to, machine quantity to get to where we need to be. Well, this is an accessory style item that 3D printing will work perfect for. So now we can on demand make parts. So we'll be faster in our turnaround. We'll have less inventory overhead.
That sounds like a really good example. Yeah.
Yeah. And we've significantly reduced per part pricing. So, but it's through all of that communication and that engagement that those ideas kind of bubble through, and we say, let's try it, give it a shot. And we're open to all of that. And I think it's a testament to all of the forums and the sincerity behind wanting to get ideas and follow through.
Is there a lot of people that change jobs that sort of cross-train, that they were on the shop floor, maybe they're in management, or maybe they're in one management position and they try something else? Is that more common, you think, with you guys than other places?
Yeah, we have a number of folks that are in the front office, either, design or in the commercial team, that have worked maybe from the shop floor all the way through like our parts and service department. So our leader over our aftermarket parts division started out in the shop as an assembler, and through time worked his way through, made his way to the office, and is now leading our aftermarket parts division and doing quite well with it. So I think there's more of that, and we're trying to be more intentful about rotations and job shadowing, job function shadowing, and things like that. We're trying to be more intentful. So I don't know if it's, some of the very large organizations have paths of growth and things like that. So they're pretty well oiled that way. But in our ecosystem, in our world, we're trying to get better at some of that, and job sharing and job shadowing. And we have seen people, move from, not laterally per se, they'll come up, will be a promotion, but they'll move, from an inside position to an outside position, or from just, a lower level designer to a higher level, maybe a product specialist or a subject matter expert. And we really try to promote those opportunities inside. And there is a rotation between product engineering and manufacturing engineering, because one's a product of the other, right? So product engineering's work on orders that are being manufactured. Manufacturing engineering ends up troubleshooting that when they're on the shop floor. So they have a pretty robust program to job swap for a couple of months at a time. So
Interesting.
There's a better understanding of manufacturing capabilities and primary design and stuff like that.
It sounds like there's good job retention there.
Yeah, we historically in ESOPs, back to the ESOP model, ESOPs historically, against statistics are, several points better, and we're no different. We end up being, I don't want to jinx it, but somewhere between 8 and 10 points better than what the average is typically. So now I got to knock on wood, but given the current job market, but we, even though we've seen, our turnover rate go up, it hasn't gone up as quickly as others in the industry.
Okay, you have seen turnover increase.
Yeah. Well, I mean, turnover as a whole, because we've had some retirements and stuff as well, but turnover as a whole, but we're still well ahead of benchmark. So, even though we haven't been bitten by the bug as much as other companies have.
Okay. Let's go back to a few of the dollars and cents thing. You guys have acquired other companies, correct?
Correct.
And then those other companies, how did that work with their employees becoming part of the ESOP?
When we acquire another company, everybody is brought into the ESOP. So
it takes them several years to get vested again?
So what they get vested at whatever their tenure is with the company that we purchase. So if somebody was 6 years or longer at their current company, the company that we acquired, then they would be 100% vested right away. Okay, so we give credit for previous employment. It does make Century a little bit different, but we do typically, in the past, we've 100% integrated the employees. So through our acquisitions, and this speaks to that employee-owned culture, we haven't typically acquired a company, looked to cut any positions. We've acquired the company figuring we are going to bring their employees over. They served a purpose with the previous company. They'll serve one with us as well. So we usually bring them in, and whether we may bring the product into our factory, which means we may not need a secondary factory, but the employees are brought along.
Interesting. Okay. What if an employee retires? How does that work with how they cash out?
Sure. So it's in our world. So first things first, the coolest part about it is if you retire from the company and you're of actual retirement age, you get your name on a board here, and we have a CEO board, and that stands for Certified Employee Owner. And you get your name and your years of service put on etched into this glass onto the glass wall that we have at the factory, so everybody gets to see that you were a certified employee owner when you retired. So it's a proud moment for folks, and that's cool. And what happens is you get your, whatever the value of your ESOP plan is, you get that in shares and percentage over a 5-year period. So what happens is you get paid out over a 5-year period.
Oh, okay. You don't get it all at once.
You do not. It has to meet a really small threshold to be paid out at once, and that's a financial vehicle for the company to be protected against big layouts of cash in large chunks, right?
Well, that makes sense. When we did our prep for this, you said there was a machinist who was a millionaire when he retired. How does that work? Give me the numbers.
Yeah, it's simple math. He worked here for a number of years. He had, a percentage of his income over those years accumulate in the stock. Not only did he, just continue to accumulate through that willed submission every year, he also gained because our stock price grew a lot. So we had a lot of growth in our stock through the early to mid 2000s. So he was a beneficiary of that. So yeah, we have had more than one shop person retire a millionaire just based on their ESOP alone, not any 401k or any other personal planning that they had. So that's really cool.
How does the stock of a private company like this go up? I'm
Sure.
like, I think a lot of people where I hear like
Yeah.
stock goes up, it just means a lot of people want to buy that.
So think about how other businesses are evaluated. Really, it comes down to EBITDA, right? And if our EBITDA, our cost, or our sales per employee is going up, our EBITDA, we're hitting projections. So we give a 5-year, 10-year projection or 3-year projection. We give those projections if we're accurate on our projections and our bottom line is healthy and we're maintaining or growing EBITDA at the same, and we're growing our top line sales, that equals more value in a stock, just like any other company. So the mechanics of a valuation of the stock is really like any other company. The difference is you can't buy stock. I can't buy stock. The only way to get that stock is to have it willed through employment at the percentage and everything like that. That's the only way to have that, to get that. So it's the same mechanisms. It's the same exact mechanism. Evaluation of this business is no different than any evaluation of any others. It's just that the fact that the stock isn't public for purchase.
I understand. Okay. Well, I'm definitely not editing that out because I'm sure everybody is asking that. What does that mean for the stock to go up? And you're not, it's not NVIDIA. Okay. What's the most difficult part of being an ESOP? What's the biggest challenge?
I think it's managing the communication. And what I mean by that is I feel a strong sense of responsibility to make sure that I'm concisely, succinctly communicating with all of the employee owners. I really, truly, personally believe that we have about 200 employees. My team and I'm responsible for 200 families, putting food on their table, giving them a lifestyle, helping them achieve the lifestyle that they want. So I owe them communication that is succinct and correct as to what's happening in the business. And they have questions, and I owe them answers to their questions. So the difficult part sometimes is we don't always have the answer in front of us, right? And so, but I owe to them, and I feel like this is an extension of that ESOP brand, is that with every employee and owner and every voice heard, I feel a responsibility to be able to either dig or answer those questions or put in front of a venue, put myself in a venue where I can answer those questions. And so I had this last year started to attend.
Other companies theoretically could feel that obligation, but it's even more. But I mean, with an ESOP, like you have that obligation. It's pretty much it's something you have to do versus other ones where it would be great if they did.
Yeah, that's right. If we're really living the culture of the ESOP, then we have to do those things. And so I started doing customer connections, what I called it, with our manufacturing floor. And so once every other month or thereabouts, I would go to a shop meeting and talk about a customer. Either it was a product on the shop floor or something that just shipped. And I'd tell them about the application, how the customer is using it. And I started to get feedback. Hey, well, what about this? Why was this person given this discount when somebody else wasn't? And so you had to manage those conversations that weren't just about, I found myself having to manage those conversations, not just about, hey, this is a fun fact. When you drive by this factory, our equipment is there and this is what it's doing for them. It was some of the mechanics of how do we manage our rep relationships and our channel partners, and how does that structure work, and what does management look like? And so I started, what my plan moving forward is to start to bring others into that conversation from the commercial team. So that's, and you say hardest part, the question was hardest part, and I'm not really laying out any difficult task here. Honestly, but it's something when you have a deep obligation or you feel a deep obligation because of that culture, and I believe I'm aligned with the ESOP culture, that I feel like that open door both directions needs to be available, and people deserve an answer, whatever it might be. So my commitment is, if I don't know it, I'll find it. And if I'm not the one, if I'm not the one to give the response back, I'll make sure that the person that does have the response connects with you. And that's the overall commitment.
This is, I like to, ask this to people, just to get personal. How do you define happiness?
Me personally, I define happiness by knowing I'm adding value. So I'm a personal believer in getting value and giving value. And I should always be giving more value than I'm receiving. And that challenges me to continue to be better. So when I know, for me, happiness is having somebody come back with questions and not just hear what I'm saying and nodding their head and going, okay, but challenging and saying, well, what about this or what about that? I know I'm adding value because I'm provoking some type of a thought past just the transaction of the minute. And that's how I know I'm adding value. And so I get happiness out of that. I really feel like I'm leaving behind, my 25 years-ish of experience and knowledge, and I'm
Purpose.
imparting that on somebody else. Its purpose is really what it is. And that's exactly what it is. So that's how I get happiness.
Can you think of a piece of your life, a moment in your life where you feel like you've experienced true serendipity?
Yeah, I'll be honest with you. I think 2005, in May of 2005, that was a key and pivotal part. I had no idea who Century Equipment was. They were in southeastern Wisconsin. I'm born and raised in Minneapolis. I had no idea who they were, what they did. And the president and the human resources director at the time came to meet me for dinner in Minnesota, and they were looking to acquire a company that I had worked for before. So they knew I had knowledge, and I really just thought they wanted to pick my brain about the company because they knew I had some knowledge and I hadn't worked there in a while. So it was not confidential, really, right? There was nothing that I was going to share that was going to breach anything. And so, but getting to know them, in them saying, we think you're the right person for the team. And I asked the question, just for this acquisition or overall? And they said, no, I think overall.
Is that why they were really there?
Yeah, I think it was to get to know me, to see what I could bring to the table, because the
That's
company
funny that
wasn't.
you didn't even know why they were there.
Yeah, I mean, I knew they wanted to talk to me, and so I had a framework, right? But I didn't know the true intent behind it. But the real part of all this story where I really felt is right place, right time, is I came down and they had a family picnic, and I came down and I saw the factory. I came down here and I said, I walked through the factory and I walked through the office space. And as you know, as it looked as like any other manufacturing facility, right? I said, I think this is home for me. And I didn't know what that meant at that point, but no, I'm sitting here 19 years later. I've had a good career. I hope to be able to finish my career this way. I've had a good career up to this point, and I've seen and I've been able to deliver growth, and I've been able to deliver value to this company and the employee owners. And I really feel like that was a changing point. And that's, for me, that was really a key. I mean, there's been other things I can get sappy about, my wedding day and stuff like that, right? But the real thing was for me, as I think, knowing this culture was something that I had aligned with. I'd never really explored I explored that option, and it was just started out as a job opportunity, and here we are.